The Nasdaq 100 closed last Friday above the key weekly trendline in red, which price has been trading around since the 16th of August, after blowout earnings from Nvidia last Wednesday, where the chip maker beat on earnings and provided upbeat forward guidance. That saw Nvidia's own stock reach an all-time high. However, the euphoria led to sharp selling the following day, as traders took profits, whilst Powell continued to talk up further rate hikes to tackle inflation in his speech on Thursday, which is why you see this big up-down move between Wednesday and Thursday. Despite all of this volatility, price finished the week above the weekly trendline in red, which saw price gap up overnight on Sunday. Price pushed higher on Monday but finished just below the key technical moving averages, with the 40-day at 15,110. Tuesday saw price really push on, after weaker than expected US job openings data for July saw bond yields fall. US job openings for July came in at 8.83 million, when 9.47 million was expected. If you look at this chart, the Nasdaq 100 versus the 10-year yield, you can see the 10-year fell sharply at the US Open, which saw the Nasdaq 100 rally. Nvidia continued to play its part by being one of the outperformers. The Nasdaq 100 on Tuesday was right back where it was at the highs of the day last Wednesday and Thursday, 15,350. This is a key area of resistance. Wednesday saw price continue to edge higher after US Q2 GDP was revised lower to 2.1% from 2.4%. This was the second straight session where traders had treated weaker than expected economic data as good news for stocks. And that is all to do with potential future rate hikes, which hits risk assets and in particular tech stocks. Tighter monetary policy will cap money flowing into stocks and riskier assets as liquidity and investment dries up when rates are high, at least compared to what they've been historically. The stock market is driven by liquidity, and as you can see from this chart, how the S&P 500 has performed since the financial crisis, where there has been plenty of liquidity and cheap money, which has led to money flowing into stocks. Central banks have been reversing this over the past 12 to 18 months, which is why we're beginning to see stocks reacting like this, where any sign of rate hikes being over is being cheered by traders. Back to the daily chart, and Thursday saw price continue to tick higher after the Fed's preferred inflation measure PCE came in at 0.2% in July and 4.2% year on year, which matched analyst estimates. There is resistance at 15,540, which is where price held on Thursday. Today we had the non-farm payrolls report, which came in slightly above analyst estimates at 187k, and 170k was expected, but the unemployment rate rose to 3.8% from 3.5%, and employment in June and July was revised down by 110k in total. So the labor market is beginning to weaken. That saw the Nasdaq 100 spike on the report before the 15,540 resistance level held and price came off. Again, bad news is beginning to be considered as good news for tech stocks, with the market now pricing in a rate cut in May next year. Before the report, it was June next year, so bringing it forward by 1 month. This bad economic data equals good news for stocks is likely to be short-lived. Ultimately, markets are forward-looking, and if the economy is slowing down and rate cuts are being priced in, risk assets are going to factor that in. Stocks will come off, like the Nasdaq 100 is doing today, as a slowing economy driven by tighter credit conditions and pulling back on liquidity will impact investment and money flowing into the stock market. The rally this week is likely to be temporary, with a bias towards the downside remaining in play. Whilst price closed last week above the key weekly trend in red, which now sits around 14,790, price remains firmly below the daily trendline in blue, with the rally driven by a handful of mega cap tech names like Nvidia and Apple, which have been driving the rally higher this week. A correction in these names would see the Nasdaq 100 head lower because of how much the stocks are influencing the index. On the downside, support levels are 15,330, followed by the key technical moving averages where price broke above on Tuesday around 15,185. Below that, and it's back down to the weekly trendline around 14,790. Resistance will remain around 15,540. No video next week as I'm on holiday for the next couple of weeks, but as always, you can follow me on Patreon where I regularly post my thoughts and levels on the Nasdaq 100 and stocks. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.